Are you considering buying your first home, but you see where prices are, you see where rates are, and you're just not quite sure that you can be competitive in this housing market with what you have saved for down payment? Or are you a parent of a prospective first-time home buyer? You've heard of their struggles of saving enough money to be competitive in this housing market. I'm Robin Gerlach, along with my partner Reed Puser of the Roots Home Sales team here in Denver, Colorado. And we get folks who reach out to us with these kind of questions, thinking of how they can enter the buyer's market. And so go ahead and set up a call with us, reach out with a phone call, text, email, and we'd love to connect with you and give you a good game plan moving forward to get you into your first home. And if this is your first time to the channel, don't forget to subscribe, tap the bell so you are notified every time we put one of these videos out. We are creating these videos to give you value, to give you advice on how to get in the market, how to maximize your investment in real estate, and overall how to make a smooth transition, whether it's buying or selling. So let's go ahead and get into it now. So today I'm gonna give 3 reasons why parents should be helping their children buy their first home. First, I wanna start out with a data point, okay? So baby boomers own over 50% of the wealth in the US, whereas millennials only have 5% of the wealth in the US. Now you might be thinking, well, of course, baby boomers have had all these years to accumulate their wealth, right? But let's compare apples to apples. Baby boomers, by the age of 35, 62% of them own their own home, whereas millennials, by the age of 35, only 49% own their own home. Why is that? As you all probably know, housing prices are much higher than when baby boomer generation was buying their homes. Salaries have simply not kept up with where housing prices are. Now, we saw housing prices take a pretty substantial dip between 2008 and 2011 because of the subprime mortgage-induced housing crash. Now, what came after that is a lot of the home builders stopped building as much to keep up with the amount of demand that then came from the millennial generation. So what we're seeing today is a lack of housing supply all throughout the market. But another cause of that is really because through the pandemic, we had low rates where the average mortgage was below 4% for a 3-year period. That created all this affordability in the housing market. And so that wasn't only for first-time home buyers. That was also for investors, for folks who already owned a home, who would go then buy another home and Airbnb it. We have another video on Airbnb and VRBO, so be sure to check that out. But it created affordability, and it was almost this false sense of affordability, because what has happened is then inflation skyrocketed to the highest point since 1981. We have inflation over 9%, and the Fed knew they had to do something. And they are basically sucking liquidity out of our system with what's called quantitative tightening. So now we not only have rates that have shot up, mortgage rates that shot up over 3% in an 18-month period, housing prices are also at historic highs. And what this has created is a very challenging time for first-time home buyers. The salary, again, has not kept up. The average household salary has not kept up with housing prices. So if you're a first-time home buyer now in 2024, you are gonna have a very challenging time to get into your first home with 3% down like maybe you could have in 2015 or 2016. Technically, you still can put 3% down as a first-time home buyer, but with where rates are and where prices are, you're gonna look at the monthly payment and it's gonna be about $5,000 a month. Whereas back in 2015, it would have been a probably manageable $2,000 a month or $1,500 a month. So that's the importance of what rates and prices have done in our housing market. And that's why I think it's very important that the parents should now step in. They have the equity, they have the wealth to kick in and help their kid get the first home. Why? Number 1, well, for you as a parent in your shoes, you're still putting money into an investment. Real estate is one of the better investments out there. Here in our market, since 2017, our housing prices have gone up 55%, or about 9% per year on average, from 2017 to 2014. That's not a bad return just on the appreciation. That's not counting the principal reduction of every month, that money that your kid would be paying rent to an institution or another landlord, they could be paying into their own equity or your combined family equity. The second reason why you should help your kid get into their first home is because, well, at the end of the day, you're helping your family, right? When God forbids your time passes here and they're gonna get your inheritance, it's either gonna come in the form of it's gonna be messy and everyone's fighting over it. Hopefully you have a will and a trust and all of that set up. That's beside the point. Your family is somehow gonna inherit your wealth anyway. So let's jump and get ahead of the game. Instead of seeing them throw all that money over the next 5, 10, 15 years to rent to somebody else, you might as well start reinvesting that into your family. It's gonna help your child start building their own wealth so they have leverage and they have equity in the next 5 to 10 years to then upgrade their living situation or start buying a rental property and building their own generational wealth. Don't you want that for your family? And the third reason why you should be helping your kid buy their first home is simply it's just not getting any easier. In 2022, 26% of the home buyers in the whole nation, this is a National Association of Realtors statistic, were first-time home buyers, 26%, where the average benchmark in any given year before that was 40% of the home buyers in the market were first-time home buyers. So we're seeing that pool of first-time home buyers shrinking. In 2021, the average bid on any home was 5 bids, 5 offers on any home. Now that's when rates were lower. In 2022, that went down to 2 or 3. Even in today's market, we're still seeing competitive offers on homes with rates where they are and with prices where they are. So it's not getting any easier for that first-time home buyer to get into their home. And we often hear a lot of folks that we're talking with, you know what, I just want to keep saving. I want to get to that 10%. I want to get to the 20% to not pay mortgage insurance. Let me tell you, the rate that you're saving that money to get to 20% is probably not outpacing the appreciation of our housing market. Even if it's not at 9% a year, it's going to be tough to save 5% annually if you're looking at the average $600,000 home. It's just really hard to save that amount of money. So it's not getting any easier, and that is why you need to step in, get in the market now, and let time go to work for you. So we've gone over 3 reasons why parents should be helping their kid get into their first home. But now, how do you do it? So it's actually very simple, because parents, you might be thinking from old methodology that you need 20% as a down payment to get into the home. Well, as a first-time home buyer, in most markets, you only need a 3% minimum, but if you have a co-signer going on the loan with you, which if you're gonna be a co-signer on the loan, you need a minimum of 5% down payment. So it's not a whole bunch of money that you're putting in. You can enter with a minimum of 5%. So that's one way. Another way is gift funds, what banks and lenders call gift funds. And what that means is that you're just contributing cash towards your kid's down payment. You're not actually going on the loan and co-signing on the loan. So you have those 2 options. You co-sign on the loan and you're gonna have to go through the pre-approval process with the bank and the lender. Or you just give a lump sum of cash to your child as what's called gift funds, and you'll have to sign a letter saying you don't expect that child to pay you back. Now, whether you and your kid work out a separate agreement that they pay you back over time, or they give you some of the equity when they go to sell that house, that's up to you guys. But that is part of the process that you guys are gonna have to go through. You can either co-sign on the loan or give them gift funds cash to help them increase that down payment, which will then help them get a more manageable monthly payment. Another little bonus here, something that you and your kid can do to both make money on the side, and you've probably heard of house hacking, but what you guys can do is you can buy a duplex, for example, and your kid lives in one side of the duplex and you rent out the other side of the duplex. So you have an on-site property manager in your kid. You're buying the property as a primary homeowner, meaning you're not having to bring 20 or 25% down payment and have to pay an extra 1% on your mortgage for being an investor. You're actually buying it as a primary homeowner and you rent out the other side, and you can buy a duplex or triplex or quadplex with as little as 5% down, even with FHA. So that is a little house hacking tip, something that you can do if your kid is going to college. You know there's going to be a lot of kids looking to rent in that area. You buy the duplex, your kid lives on one side, you rent out the other side, you guys cash flow and collect the rent to help offset that mortgage payment. That's just a little house hacking tip for you and your family. So if you are that first-time home buyer, reach out to us. Your parents or your family might be able to help. We've helped other clients get into their first home with help from their family. I would say about 50% of my first-time home buyers in the last 2 or 3 years have had some family assistance. Or if you are the parent of a prospective home buyer, reach out to us. We could talk to you about the different ways that you can help your child get into home and start building wealth for themselves. And one more time, don't forget, if this is your first time to the channel, please subscribe, tap that bell, make sure you are notified. We plan on continuing to make these kind of videos to give you value and help you continue to build your family's wealth through real estate.